Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So today I'm doing another reaction video. This is from the Autoline Network featuring Montana Skeptic, a Tesla bear. I always like to get a little bit of a view of what the other side is thinking, right? I'm very positive on Tesla. I didn't just decide one day, oh, Elon Musk is awesome, therefore I love Tesla. No, none of that happened. I did my homework, did my research, came to my conclusions and decided, holy hell, I'm going to put some money in this company. I believe that they're going to execute on their plans and I believe the landscape looks like this, blah, blah, blah. Very positive. But it's always good to check your thinking and reasoning. What if you missed something or you came to a different conclusion? Actually, there was an error in your thinking, your logic, your reasoning. So I always like to hear from Tesla bulls and Tesla bears, see both sides of the argument, both perspectives. You know, if there's a flaw in your thinking, you want to know about it, right? Of course. On the flip side, if you dig into the arguments from the bulls or the bears, and in this case, being a bull, I'm talking about the bears, and discover, hang on a minute, in all the cases that I hear their argument, the foundation of what they're saying is based on an error in judgment or reasoning or just drawing a very vastly different conclusion, which I'm unable to do from the same information. So I just have to say, well, maybe just a difference of opinion there. We'll never know until it plays out. So with that being said, I started watching this interview with this Montana Skeptic, whose name I've seen floating around before, never really come across any material and paid attention, but I'd heard the name float around there. So he's got some weight in the Tesla investor space. A few minutes in, maybe just as he started describing his sort of philosophy on Tesla and his theory, his thesis, I just was like, there were so many things I just wanted to say, dude, like, I'm sorry, but no. And so I press pause and now we're doing a reaction video. Before I dive in, I just want to say to Montana Skeptic and just in general, right? I'm never attacking people. It's always the ideas. So just keep that in mind. I'm like this Montana Skeptic guy. I'm sure that he believes completely in his thesis, in his thinking. He's out there. He's sharing his thoughts and opinions. He's trying to put food on the table. Like, go for it, man. Nothing personal, right? I'm not hating on you at all, brother. But some of the ideas, some of the things that you sort of began presenting, it's like, okay, I really need to address this because this interview is online. And I think the interviewers were very, very kind, at least in the early stuff that I saw of this episode. So I'll have to step in a little bit and just sort of put in the 2 cents because it's not socially inappropriate to do that when we're not having a conversation. Hey guys, before I forget, just letting you know that WeBull have extended their offer for US residents. If you'd like to help out the channel and get up to 2 free stocks by opening a new account with WeBull, check out the link in the description. All right, let's get back to it.
Can you talk about the business model? I mean, so you say it's a flawed business model. So describe what it is and what it perhaps ought to be.
Okay, well, first of all, it's heavily dependent on subsidies. Okay, if you add up all the subsidies Tesla has received directly and indirectly, including the indirect ones, federal income tax credits, the ZEV credits, the regulatory payments made by others, for example, the $960 million New York spent on its factory, the $1.3 billion that Nevada offered in its subsidy package, the tax abatements it received in California that it continues to receive in Nevada, the rebates that various states offer or tax credits for state income tax rather than federal income tax credits offer to buyers of Tesla cars. You're north of probably $7 billion.
Oh my God. Whew. Okay, Stephen, calm down. Okay. All right, guys. I'll try to be delicate here, but I do need to make my point clearly, okay? If there happen to be incentives, rebates, subsidies in the industry that you are in, and you have awareness of this, knowledge of this, you'd be nothing short of moronic not to take advantage of them. So we can't just automatically say that a company that receives subsidies therefore couldn't exist without them. Although in some cases it could be possible, right? But we have to look a little bit deeper, okay? If you're operating a company like Tesla and you understand that there's major positive economic incentive in the long term to transition off fossil fuel vehicles, and you have an awareness that then, in fact, there'll be states, there'll be governments that will try to incentivize people to transition to electric vehicles, to generating their own energy, solar, to storing their own energy, batteries. If you have an awareness of where the technology is going, because you've engaged your big brain and gone, oh, hang on a minute, EV battery prices keep dropping, solar technology improving, oh, okay, cool, and environmentally there's going to be incentive, and in developed nations we'll have the resources to incentivize that, it doesn't make you dependent on these incentives to exist. It means that you have an awareness and you can structure and integrate that into your business and go, oh great, cool. We've brought in a little bit more capital. We've had some subsidies or rebates. That's excellent. We can deploy some additional capital and accelerate our mission a little bit faster than we would have been able to do otherwise. This is just this one-dimensional thinking, okay? You have to look at the big picture and go, oh, hang on a minute. You know what? If Tesla didn't have any of these subsidies, if they didn't actually exist, that means that perhaps they would have moved slower. They're not dependent on those. They've utilized those. It's like if somebody says to you, hey, I can give you $1 million in exchange for you doing X, Y, or Z, which you were already planning on doing. Would you like to take the $1 million or would you like me to keep the $1 million? Because you were going to do that thing anyway. Well, what are you going to, like, come on, man.
And that doesn't even count the hidden tax on people who buy internal combustion cars, okay? Because they have to pay more for their car because the regulatory credits are flowing to Tesla. So you'd say, well, with all that, have they made money? And the answer is no. Since going public, they've lost more than $6 billion. And I don't see how this company can ever be profitable without subsidies. It certainly hasn't been with subsidies.
I mean, what do you say? Like, yeah, just to reiterate my point earlier, the fact that Tesla hasn't been profitable on an annual basis yet isn't anything to do with the fact that they're dependent on subsidies. It's to do with the fact that they've been investing in growth. Again, it's just such one-dimensional reasoning. It's embarrassing to hear statements like this. They're so easily dismissed. You have to look at all of just...
The federal income tax credit has gone away here. And now it faces something that it's never faced before, especially in 2020. And that is just an onslaught of competition.
Oh, fuck. He didn't just say that. Yeah, okay, the competition is coming. Yeah, cool story. It's been a decade now. Any Tesla bears out there, stop saying this. It's not here yet. The supposed competition from the big brand names have been pitiful failures, okay? In terms of sales, in terms of performance, in terms of value, they fucking suck, okay? It's just a fact. There will be potentially in the future competition, but this isn't a way for you to dismiss Tesla, its company, its future. No. It's a statement about what may occur in the future, but based on all prior evidence, there's no imminent threat of any competition against Tesla, period. If there was potential threats, if there were companies that were putting out specs for cars that were actually coming, real specs, not potentially targeted, ideal, maximum, optimum range, asterisk, or something with the... Please, we need stronger arguments than this.
The EV makers in Europe held back. They had incentives to hold back until January 1 of 2020 because of the way the European Union regulatory emission standards works. And that's no longer happening. I mean, if you look at 2019, okay, Tesla increased its revenues by $3 billion, right? And it ran Fremont full out all year long. And it had to slash prices on its two highest margin cars.
This is such faulty thinking, okay? If prices were reduced on a product, there may be more than one reason for that. Again, this is just like one-dimensional thinking. Oh, prices were reduced on some products. Therefore, prices needed to be reduced because there was not enough demand. That is the only explanation. Nothing else could possibly explain that. Let's refer back to Tesla's mission. Accelerate the world's transition to sustainable energy, right? What are Tesla doing right now? They're scaling production. What's happening? Their costs are declining. What does that do? It allows them to increase their profit margins and or reduce prices. Now, what's so important for Tesla to be incentivized to get more vehicles on roads, to meet their mission? What else are they trying to do? Win autonomy. How is autonomy won? Data. More cars on roads, more data, more lead in autonomy. Autonomy is won sooner. Comprendo? Tesla is incentivized for multiple reasons. Their core mission, plus the fact that winning autonomy is going to be huge to them to get more vehicles on roads. As Tesla's costs come down, they're attempting to maintain margins and allow more people to access their vehicles to make them more compelling and even better value. They're not here to make huge profits. They're here to get to scale. I have to really emphasize this. Their mission is to accelerate the world's transition to sustainable energy. More cars on roads does that. Tesla's goal is to make EVs, mass market vehicles, okay? They're starting at high cost, low volume vehicles and working their way down. They're going to keep going down and down and down and down and down as far as they can get. Battery costs continue to decline. Tesla continues to improve and scale. Economies of scale come into play. So again, it's just such narrow thinking. It just defies belief. But I kind of understand this. I think that perhaps Montana Skeptic, maybe just by the fact that your very identity is tied to the word skeptic, you're not even using your real name online, but just this moniker. Maybe that's actually tainting your view. You've got a little bit of tunnel vision because you have to be the skeptic, and you've got confirmation bias. Maybe you're looking for things to back up your perspective and not actually seeing things for what they are. Maybe I'm wrong. But yeah, this is how I think about the situation.
And that's as good as it gets, because now this year, Tesla doesn't have Europe to itself anymore. It's really facing intense competition from so many people, from besides Audi and Jaguar, BMW, Polestar, Volvo, Volkswagen. They're all introducing EVs over there this year. And because of those European incentives and the regulatory system, those people can sell their car, the EVs, and lose $20,000 per car, and it still makes sense for them to do it. Tesla can't afford to lose on the car. The other ones do it so they can sell their more profitable, cars that consumers actually more want to buy.
All right, let me explain what I think he's trying to say here. I may have misunderstood this because it just sounds so absurd. I just can't even grapple with this. So I must have missed something. But my impression here is what Montana Skeptic is suggesting is that it's a good thing all those automakers in Europe can keep selling their highly profitable internal combustion engine vehicles and only make EVs just to get their credits so they don't get huge fines and make up for those losses on selling EVs at losses because they can't make them profitably by taking some of the profits from their internal combustion engine vehicles, which make lots of money. Is this an argument against Tesla's ability to succeed in Europe because they can't fall back to selling their internal combustion engine vehicles at a high profit because they don't make them? Their EVs are profitable. They're like one of the only automakers outside of China who can actually produce and sell EVs at a high profit margin. Oh, and again, if anyone's like, oh, they don't make a profit. No, okay? What happens before they spend their money on other stuff, okay? They're making these cars profitably, and if they weren't reinvesting in building new factories and stuff, they would be making stupid amounts of money and stupid amounts of profit. But they're not, because they care more about accelerating their mission than making profits. I mean, what is this? What did I miss? Please tell me in the comments. How did I misunderstand? What? I'm just so lost right now.
The fact is that year after year they're unprofitable, and you're going to see the opposite of free cash flow this quarter. Obviously, even though Tesla ran Fremont full tilt up until a week ago, and in the last week, those cars don't get delivered in that quarter anyway.
But isn't it interesting that they're running the plant full out because people basically want to buy the cars, which is I think what David was saying.
Sure, but they're going to end up with 30,000 cars in inventory, John. Gary, they can't sell the cars.
Oh man, where to start now? Again, I'm nothing personal, right? I'm not taking the person, just the ideas, and this is an absolute doozy. So first of all, this may have been a setup. In Q4, Tesla actually guided at the end of last year that they intended to build inventory up in Q1. So this should happen. This was like almost like they're going to have lots of cars in inventory. No, yeah, they will, because that's actually what they guided. And second of all, the number is less than half of 30,000. So does this mean Montana Skeptic will change his thesis, reassess, or perhaps is it more likely that we'll see an article posted soon on Seeking Alpha, I think he writes for, about how Tesla's Q1 was actually terribly disappointing and there's still no demand. But don't tell anyone about this interview I did a few days ago. Shh.
But the competition is coming. There are going to be many compelling EV offerings. They're all going to cut into Tesla's market share. It's already happening.
Where to start? Now, again, the competition, there isn't any yet. Of course, there will be some. But I thought this would happen too. I actually believe that Tesla would lose its market share as an overall percentage of the EV market as the industry grew, right? So far, this hasn't happened. There's evidence, right? Tesla's maintained its overall market share, which is mind-blowing to me, okay? But whatever. But this is not a relevant point, okay? We're transitioning from almost nobody buys EVs to almost everybody will be buying EVs. This is going to follow an S-curve adoption rate. It's going to happen way faster than people think. It doesn't matter if there's lots of other competitors, so to speak, selling EVs and coming into the space, because the entire underlying market is just exploding exponentially from almost nothing to the entire global auto market, right? It's going from 0 to 19 million. This is, again, it's just like one-dimensional thing. It's like, oh, if there's other vehicles that are EVs, then therefore some of those people will buy those vehicles instead of Tesla's, and therefore Tesla's market shrinks. Yeah, cool. That makes total sense, except It doesn't, because in fact the underlying market itself is growing. It's a non-issue again. Come on, dude, please. This is just like, I haven't found any sturdy foundation in any of these points yet. Like every single one of them is just like, oh, okay, yep, how do I pull this one apart? Oh, that was easy. It's like a tissue.
And the other automakers also have a line of cars that are not EVs. And so as much as they have to take a hit on their EVs, and they're incentivized to by these crazy regulatory schemes, they can still make a profit or recover some of the loss in a tough year like this. And Tesla, unfortunately, does not have that position.
So I've punched a hole in this from one direction already. You know, Tesla does actually make profits on their vehicles. They're just reinvesting those. Therefore, they're not coming through as net profits on the bottom line because, oh, I'd rather build another gigafactory than make a nice profit to please a few skeptics. So we've covered that. Let's look at this from a different angle. Forget Tesla for a moment. I just want to just allow you to just dwell on this. The argument here, what I'm hearing is effectively that the competition who's coming with these great EVs that are going to take on Tesla are only able to do so because they are selling internal combustion engine vehicles highly profitably and then using those profits to subsidize the losses because they can't make EVs profitably, whereas Tesla can. They can't make EVs profitably, so it's a great thing they can keep selling their internal combustion engine vehicles. Remember, the transition is happening. Wouldn't that give you pause for concern?
And I'll tell you what, having been in an e-tron and having been in various Teslas, there's absolutely no comparison to the beauty of the interior of those cars. It's just, and the fit and finish, it's the Audi is a much, much better put together car than the Tesla.
Now again, not attacking the person, but this is just like, if all you've got to fall back onto as far as the competition goes, like on the list of things that actually matter to the majority of consumers in a car, is the interior finishes number one? Is it more likely that in most cases safety is probably higher than that? Is performance probably higher than that? Why would you bring to an argument as a strong point, you know, a sort of a big point there, the interiors are nice? Like, wouldn't you? Oh, that's right, because there's nothing anybody else has on Tesla at all except aesthetics, styling, the finishes, right? Because what Tesla have done is they've stripped away all the unnecessary bullshit and created the highest possible value product they can, okay? They think about, just in terms of the majority of the market, what most people prioritize, let's get those right. Things like safety, performance, you know, cost of ownership, all of that sort of stuff. Then we'll focus on the other things after that, okay? Most people don't want to, you know, froth over like the nice leather inside their car and, you know, tell everybody how amazing it is and show it off. And, oh yes, mahogany. Freaking, there's unicorn tears in this wiper fluid too, man. Oh, what a car. Some people are into that stuff, I get it, but the majority aren't. So like, if all you've got, if the foundation of your argument in terms of the competition is like, man, it's really nice inside the car, geez, you got to wonder, like, take a look in the mirror and think, hang on a minute, if that's all I've got, maybe, you know what? It's a pretty weak argument.
I'm not an expert, but without LiDAR, you're not going to have full self-driving. Full self-driving is years away anyway, but you need LiDAR. Why? Because LiDAR gives you a precise read on distance and edges.
Now, I'm no expert either, but I don't really think I need to be one to do a little bit of deductive reasoning, and let's see if you guys follow along. Maybe not, okay? Like, if you don't come to the same conclusion, it's fine by me, but if I'm trying to understand, you know, whether something's possible or not, I might look for an example. Has it been done before in any cases? Like, are there any examples of camera-based system, a visual-based system that is able to drive vehicles, to perceive depth, do a decent job at it? Oh, yes, there are. They're called humans. They have 2 cameras, pretty poor computer, but, you know, it does the job. Even if they've only got vision in one eye or, you know, poor eyesight, they can still get the job done. That's cool. So we've got some examples of cameras and a computer working. How the fuck then do you jump from that to it's impossible for a camera and computer to drive a car when you've got fucking like hundreds of millions of examples of that particular system working? How do you go to LiDAR as necessary? Cameras and a computer can work. Now, perhaps you might argue LiDAR might be effective, more effective. Maybe that's true, but that's like pursuing a different avenue in an attempt to achieve a result that we know can be done by other means. Like, it's it's ridiculously expensive. It's butt ass ugly as well. Like, there's so many things going against LiDAR for self-driving, but forget all that. Like, it's just, let's do some deductive reasoning. People do it with a couple of cameras and a crap computer. It can be done with a couple of cameras and a computer. Prove me wrong.
For the cameras that Tesla has are low resolution, number one. Number two, to process what that object ahead of you is doing, where it's going to move next, you need several seconds of data that have to be processed and kept in the in the cache simultaneously. That's a huge amount of computing required for that.
And talk about self-immolation here. I refer you all to Tesla's self-driving AI chip, developed in-house, that industry experts are happy to suggest is years ahead of anything that's been developed in the wider marketplace. This is why Tesla's no longer buying chips from Nvidia. Their own ones are better. Alright guys, that's it from me. I hope you've enjoyed this video, seeing some of my perspective, and of course seeing a little bit from the other side as well. If you agree or disagree with anything I've said, have any counter arguments, leave them down in the comments below. I'll be happy to hear your thoughts. Big thanks to Autoline Network, and a massive shout out to Montana Skeptic. Thanks for putting your ideas out there. Thanks for being a good sport. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. Do you agree or disagree with anything I said? And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again.